Egypt might be some 3,000 or so miles from Davos's commanding heights, but there can be few delegates attending this year's conference who would not have wanted the economic performance seen in Egypt over the last few years, following the introduction by a new business-friendly government of a series of liberal reforms.
We had been seeing growth of more than 7% for 3 years. We have been seeing investments in unprecedented levels, domestic investment and foreign direct investment reaching 8.5% of GDP.
That's not to say, though, that Egypt is immune to the global economic crisis. Growth this year is currently estimated will drop to around 4%. Tourism, remittances from expatriate workers and revenue from the Suez Canal will all decrease.
I mean, I've seen higher numbers, which I've been skeptical about. I think 4, probably around the range.
One area where Egypt has been particularly fortunate is in its banking sector. It's had little, if any, exposure to the subprime mortgage crisis, due in part to reforms following its own debt crisis at the turn of the century.
The banking sector was in a sort of an intensive care, dealing with non-performing loans, recapitalizing banks, doing mergers and acquisition. So we were, in a way, lucky that the patient was already in hospital while the trouble was on the street.
In fact, one of the principal lessons from Egypt for any reform program is to make sure you have, at its base, a solid banking sector.
Allowing the banking system to grow too quickly and to be unregulated, in the sense of allowing inexperienced owners to become big players in the banking system, will lead to a disaster.
And the banking sector, breaking with the global trend, is one area that investors expect to perform well this year.
The more solid sectors that can survive the crisis, we can claim the banking sector, though the banking sector worldwide is doing really very bad because they really have a problem. The problem that they have, it's not, thanks God, it's not in Egypt.
Analysts also believe that other areas, such as the retail sector, will continue to grow.
We believe Egypt as an economy and as a society is growing very, very fast. There are cities, actually whole areas that 5 years ago were desert, and now we're actually opening 3 to 4 locations there, like New Cairo, for example.
New industries too, such as ICT, are also expected to do well, again despite the downturn.
Egypt can really make use of the current crisis to create benefits to its economy. At the end of the day, people will look around to cut costs of their operations. Egypt is an alternative destination for offshoring and outsourcing.
Not all aspects of Egypt's economy have been performing well, though. The stock market has crashed some 70%, due in part to a reaction to a 3-year strong rally. And the government is aware it needs to take steps to counter global economic conditions.
With the recent changes in the world, I think it has been the government's commitment to try to lower the cost of investment and to lower the cost of doing business in the country, at least to make it a good venue for investments to relocate.
The government also plans to counter the global meltdown with a $2.7 billion stimulus package, with particular focus on developing the country's infrastructure.
The messages we're giving: under no circumstances will there be a slowdown in the upgrade of the transport system of the country.
And it intends to press ahead with its privatisation programme, with plans to give all Egyptians over 21 years shares in some 155 state-owned companies.
We are in the middle of the healthy public debate about this topic. It's a very big project. It's a kind of mass privatization, but with all the lessons that we have to learn from the Eastern European model.
So Egypt may have learned from Eastern Europe, but what lessons can other countries learn from Egypt, apart from ensuring you have a strong banking system?
It is precisely at this time that one has to be very clear about one's strategy and the goals that we're seeking, because it's those that position themselves well when the trend reverses that are going to be reap all the profit or the gains from having done so.